But we'll get down now to the market poll.
Absolutely, that's top of mind for everybody. The Nifty has just posted its longest losing streak this year, with the benchmark index declining by close to 4% over the last 7 trading sessions. So will the sell-off continue, and which sectors will bear the brunt? We did a quick dipstick poll among 7 brokerage houses and market participants. Neeraj, what's the prevailing mood out there?
Well, bearish, if you can call it that, Ira. But it's interesting to see that almost everybody unanimously has given one verdict, and that is that the market fall has got almost nothing to do with the geopolitical tensions. Those are a thing of the past. Remember, we were talking about this yesterday on First Word as well, that if you cry wolf a number of times, then people will stop worrying about that. And I think that's led to this response as well. So 43% of our respondents say that valuation concerns are the key reason why the market has fallen the way it has. And the volatility due to the expiry and due to all that's happening in the markets currently, maybe due to valuation, maybe due to the economic concerns, is also a part reason for this. In fact, 2 of the respondents mentioned that we might actually see a bit of a stability once this series expires. I don't quite understand the rationale there, but let's wait and watch if indeed that happens. The other interesting bit is about the downside for the Nifty. Now, the key is there is a bit of a majority out here. 57% of the respondents believe that the maximum downside for the index is about 200 points. A few people in favor of even less than 100 points as well. I don't know if this brings in the trading angle out here, but when we asked about what the view is over the course of the next 3 to 6 odd months, 57% of the respondents believe that the downside to the index could be about 200 points or less than that. Over 500 points, that's about a third of our respondents. However, a bit of a minority. Where is the downside seen? Whether it's 100 points, 200 points, or 500 points, or over 500 points, whatever the downside percentages may be. But when quizzed about what are the spaces wherein the downside could be seen at, I think there is an overwhelming majority which is betting on banking and NBFCs, and a bunch of people talking about defensives as well. The interesting bit is, we've been talking about this, that consumption remains the driving force of the market on the upside. Some of these consumption-related stocks are overvalued, but nobody believes that this is a bucket that will correct. So I believe the mood out there is that if there is anything that can pull the market up, it is the consumption space. Therefore, don't bet on that on the downside. For the downsides, look at banks and NBFCs. They are probably overvalued, so go out for them. And look out for defensives as well. They haven't, in a manner of speaking, corrected too much. Maybe they could correct now. So that's the third response. And last but not the least, how long before the recovery? This is an interesting one. Nobody believed that it'll be over 6 months. So for people who might be predicting doomsday and thinking that now until the next 1 year, we'll probably not see any signs of recovery, that theory is out. Majority of the respondents believe that we will recover. Whatever levels we go down to, and whatever those individual levels may be, but we will recover in less than 3 to 4 months. About a third of a percent, or slightly less than a third of a percent, maybe a quarter of a percent of the respondents believe that it'll probably take about 6 months, slightly less than 6 months or around 6 months for the recovery to come in. So some people pegging March to be the case, some people pegging December or January to be the case. So that's the timeline with which people are working with. Almost no one believed that there will be a recovery that will happen immediately. So even the 100-point respondent who mentioned that there could be a recovery in less than 100 points downside being seen, even they believe that the time taken to recover would be at least 3 months, maybe even 6 months. So this I found to be the most interesting bit, that even if we don't have a large price-wise correction, we will certainly have a time correction to the tune of 3 months, 6 months, maybe more.
The uncertainty around the economic recovery, right? I mean, if you don't feel the animal spirits are back in the economy in any measure whatsoever, how are you going to be optimistic about earnings, or how are you going to be optimistic about anything else in that sense? So I suppose time is the only thing that will help heal that.